since these other, jabronis out there who are trying to add 200 grand on top, then a 3% fee on top of the 200 grand, now those people are not involved. Not with this guy who don't want you to kick his tires. So he's selling it to you at 4.2 million plus a fee. You see that?
Yeah.
Just because it's listed at a price doesn't mean that's the price, right?
Terrace Apartments.
Hello, this is the La Terraza Apartments. Is that correct?
Yes.
Hi, I'm trying to reach Steve. Do you work with Steve?
Which Steve?
Steve Wu?
Yes, I do. He's the actual owner,
Yes, ma'am. That's who I'm trying to speak to.
and he's not in at this moment. He stepped out. He should be back in 30 minutes.
Okay. You want me to give him a call then around, what is it, 12:15?
Yes, sir.
Okay, I'll call back around 12:15.
Thank you.
Thanks. Bye. Okay. I want to call Steve to make sure that number one, he's a real seller. Number two, we can figure out, right? We need to learn the story, the motivation, just like we
Right.
mentioned. All right, but I want to let's see here.
The other
Uh,
guy's number is in that I CC'd you to it.
uh-huh.
His name is Jim. That's the guy I was talking to prior. Saw that. And those are all the deals he sent me. I'm looking at the one right below the 56 unit. I think he added it twice. You can keep going down and there's more information on it right below, right there. And it'd be great if we could run through the numbers together that way. Like I'm I'm like 98% sure that I got the right formula. I got the
Sure.
formula right. So it'd be good to just double check.
So for everybody here, we haven't done this so far, but this right here is a rent roll. Okay, so what Benny has here is a deal that somebody sent him. It's not the broker, it's not the seller. These guys and girls, they're all over Facebook. They always got these deals, and they always will. They're kind of a pain to deal with, honestly, because they're never the decision maker. They never really know what's going on. They don't know the story, the motivation. They barely ever have any information. Uh, but they want to make sure you're not going to kick their tires, right? But anyways, this one is a rent roll. Okay, we haven't gone over this yet, but this is a rent roll that they sent. And then this is Steve Wu's income statement, supposedly, I believe, for the La Terraza profit and loss. So, Benny, run me through your numbers. What do you think these 56 units are going to rent out for in their current condition? Because again, you don't know what condition they're in currently. 56 units, what are the rents?
So the average current rent there right now is $800, or it was 808, but I just put $800 even to keep it simple math.
So they're bringing in 4205. They're charging rubs, which is for the water. So currently they bring in 4205. Oops, that's my phone. Let's go to calculator. 4205 divided by 56. So it's actually, let's see how many vacant units there are. So we have one, two, 3, 4. 1, 2, 3, 4. 4 out of 56. So it's currently sitting about, 7 to 8% vacant, right? So about 90% occupied on the higher end. Conservatively, 4205 divided by 50 units. All right, what number did you say?
Well, the average rent was 808, but I just put 800 even.
All right, good. I want you to understand that this is also including rubs, right? So this is also including utilities that they're charging back for the tenants.
The bill back system.
Yeah. So 856 times 800, what's that give us? Benny, get your calculator out.
44,800. By the way, I wanted to mention that he sent two of these, one of them being a rent roll, and then the other one I think was just like a regular financial. And I was going off of the other one, so we might have different numbers here.
All good. Just work with me here.
Okay.
So 56 times 800, 44K. Now let's apply our occupancy. Let's use 90% occupancy in Houston. Okay, so what does that bring us down to?
What do we do the 12 months before that, or
It's either way, it's fine. We'll do that in a sec. Let's apply our occupancy though. What's that bring us to a month?
it brings us to 39,600,
Now multiply that by 12.
175,200.
About 475.
Yeah. And then I
Alright.
guess
Now, what do you thinking your expenses are going to be?
I didn't come up with a percentage. I just went off of the sheet. It came up to 212,542. If you look at the bottom right above NOI.
Yep. And look at this, by the way. I remember I'm trying to get you guys to learn this stuff without having to dive into spreadsheets. You see how we just said, what are the rents? Okay, cool. What's the occupancy? Got it. What's the annual income? 475. We didn't look at I did have it pulled up, but we didn't need that to tell us the rent, right? But we did that and we landed on the exact annual income that this guy's getting. We're off by $2,000. Okay.
Yeah.
Total gross income. We got 475. He's got 477. So I just want to show you, y'all don't need all the information from these people. You can just run them. But let's do the OpEx ratio here. So we got 212, 542 divided by, I'm taking this number here, 212, 542, his total expenses, and I'm going to divide it by the total income, which is 477,679. And that's going to tell me the OpEx ratio, 45%. Now, Benny, this is what I was telling you to do on Tuesday night when you're like, I don't know the OpEx ratio. I don't know where to find it.
Yeah.
You go look at these, you look at 5 of them, and if they all come out to 45% on it, then you know that the market's OpEx ratio is 45%, right?
Right.
All right, so now we know the OpEx ratio. So let's figure out our NOI. So let's multiply 475 times 0.55.
4 or 5 or 5? Oh, no. Yeah, you're right. You're right.
We're going to
It comes
subtract it.
261, 250.
All right. Let's call it 260K net. So 260K net. What price are they selling it to you at?
4.2 million.
Not with this guy. Not with this guy who don't want you to kick his tires. So he's selling it to you at 4.2 million plus a fee. You see that?
Yeah, plus the fee. Yeah.
All right. So what's your total price? Do you know what his fee is?
No, I don't. And one of them, it was like a plus 3% fee. I think if you go back up, you might see like some of them are plus 5s, some of them are plus 3. So yeah, plus 3%.
All right. So what is your total price? Do 4.2 million, put it in your calculator.
Okay.
Now multiply it by 1.03.
That's 4,326,000.
4,326,000. Justin asked, is there no other income?
I was gonna ask that, but it's like $620.
There is. This is your other income right here. Your plus 40, 40, 40, 40, 40, 40, 40, 40, 30, 30, 30. Every month he's getting that. It's already included in this top line rent number though. So that's his other income. All right. So, and what happens too on these smaller deals, just so you know, a lot of the other things that might come like late fees, application fees, a lot of those charges could be kept by the property manager. Property managers will charge these fees and they will keep them and not give them to the owner. So it depends on what your structure is with your property manager. And I ran the numbers here. How much is he paying for management? Can y'all tell me what the percentage is he's paying for management? He's paying basically 48 grand a year and his total income is about 477. what's his percentage? 10%. That's right. So he's paying about 10% management, which is not unlikely, with payroll and everything here. Let's look at his insurance. 21 grand. How much is that a door? Insurance for a 56 unit in Houston. How much do you think we'll be paying per door?
Quite a bit due to hurricane and stuff.
This guy's paying, so total, introduce yourself to everybody, Robert.
How's it going, guys? Robert McLeod. I'm with TR3 Capital, partner with Alex and Matt. So just trying to listen in a little bit. See
Robert's my partner. Robert is a killer, and Robert and I are the ones who analyze all these deals together. And so let's see here, Robert. They're paying, let's just call it 22,000 a year for insurance divided by 56. They're paying $392 a door for insurance.
I was gonna say probably something closer to $1,000 a door, 800 maybe. You might be able to find. Insurance costs have gone up insanely.
Yeah, so he's going to basically double his insurance. So your expenses are going to be more here. He's probably not paying a lot because Steve Wu bought this in 2017 for only 2.7 million. So he paid 49 grand a unit, and you're going to be paying what's our total sales price, Benny?
4.3 now with the fee.
4.3 million divided by 56. You're going to be paying 76K a unit, little less than double what he paid. And so your insurance is going to be more at this new higher price. Just FYI.
Okay.
But all right, so 10% management, insurance might go up. This looks potentially accurate for taxes.
Would it be safe to say if we could just do the 50%, or wait, actually no, that's something else.
Yeah.
Or for the OPEX?
Yeah, you could use 50, but let's just keep it as is. I'm just pointing it out to you. All right, so your total price is 4.3 million. Let's just call it that. So what cap rate are you buying it at? 260 divided by 4.3 million.
The average, well, I came up with the cap rate of 6.3%. The average cap rate in Houston, I called a few. It was around 6% to 6.5. So I just came at 6.3, and I think that's also what they put in the email. I don't know if that's accurate enough, but yeah, I went with 6.3.
Okay. Now, it depends on what part of Houston you're in, right?
Right.
I
looked on Spot Crime, and it didn't look like a terrible area.
If your interest rate is going to be higher than 6%. And so if your interest rate is higher than 6%, let's just run the numbers here. So you're buying it 4.3 million. Is that, you had said you came up with 4.7. How'd you come up with 4.7?
Yeah, so I came up with 4.7 because I did 800 market rent, 56 units, 12 months. But I did do 95% occupancy, and that's probably why. I did annual income of 511. My operating expenses at 212, which is that number that they included, and then I did the NOI of 298.799 with a cap rate of 6.3%. And then I did that formula, and then I came up with 4.7 million, 4,742,000. So,
all right, well, let's see if it works there.
okay.
Can you tell me how much debt this deal can support?
Oof.
Remember, everybody, remember our equation from yesterday. The NOI needs to be 1.25 times the debt. So if our NOI is 260, how much debt can it support?
208.
All right, so it can support $208,000 of annual debt. That's the minimum, or sorry, that's the maximum debt it will they'll allow you. Okay, so 260 divided by 208. Perfect. All right. So if your debt is 208,000, NOI 260, debt 208. And this is actually a pretty liberal number here. But let's just assume you can get 7.5% interest only debt on this in order to make this work. So what I want you to do is figure out what your loan balance is. All right, so let's divide 208,000 by 0.075.
2,773,000.
Yep, we'll just call it 2.8 million.
2.8.
All right, so your principal balance will have to be 2.8 million. So if you're buying it for 4.3 and the only debt you can get is 2.8 million, how much do you have to put down?
You got to put down 1.5 million.
That's right. So it's your debt, your down payment is 1.5 million. How much cash flow are you getting when your NOI is 260 and your debt is 208? How much cash flow are you getting?
58
52,
or
right?
52. Yeah, 52. Yeah.
52. All right, so what's 52,000 divided by 1.5 million?
3.4.
Okay, 3.4%, not great. 3.4% cash on cash. Okay. And how much down is that? What's 1.5 million divided by 4.3 million? You're having to put down about 35%. Okay. All right. Next question. What do you think these rents should be?
Yeah, so I was doing some due diligence and I came about 1,000 to 1,300 average market rents. And they're currently at, like I said, average $800 rent. So that's like a minimum $200 increase in rents.
Okay, where'd you come up with that?
I did I don't know if it's a reliable source. I did a Rentometer, uh rent cafe, and then I think I looked at some like loan.
Brian, so like we mentioned yesterday, don't use those things. Call the apartments. Like look at your competition. Like this one here. Let's look at this one here. This is right down the street. Same street. They for the one bedrooms, they're asking $1,000, and this is what their property looks like. Let's look at it. They got a pool, they got a playscape. Here's what
Really
their
nice.
units. Yeah, much nicer. This is what their units look like.
Yeah.
Okay. So if your place is a lot less nice, has a lot less amenities, is gonna say, hey, tenants, we're raising rents to $1,000. Why wouldn't you just go move in down the street?
Right.
You know? So that's why they're at 800, including the utilities, including the water. They don't even charge back the other utilities. They pay for them. So really your effective rent is much, much lower than 800, but it's because, you have this property and others down the street, they're charging $1,000, but they're also much nicer. So
Right.
that means that your property can't charge that. If you try to, your tenants are just going to leave and go to a nicer property, right?
Yep.
Let's look at this one. This is on the same street as well. They're charging 847 to 1,100. This is a much bigger complex. 386 units. Okay, asking rent, they're about 938. All right, let's see what else we got. Whoa, did you see what that thing was bought for? So this one, how many units was this? 348 units bought for 13,000 a unit, 2011. That's pretty
That's
crazy.
insane.
All right, let's keep on going.
So you would say it'd be hard to add value to the property or like grow.
They might already be there, right? It's not like you're at 400 and you can raise them to 800. You're at 800, and if you raise them $100, your tenants might just leave to go to other properties. Unless you updated the property and did a bunch of stuff, but that's also going to cost a lot of extra money. 246. Let's look at this one. 336. All right, this is Wesley Gardens. They got, that's so wild, right? They just put the playscape in the middle of the tennis court that nobody is using. This also probably isn't the nicest area in the world and in Houston. We can tell that by a few things. How can we tell that, Benny?
The neighborhood. I don't know.
Yeah, neighborhood. I saw some burglar bars out front. The restaurants, the retailers that are nearby, all those types of things are indications. You know, downtown Houston's way over there. This is kind of the southwest portion of Houston. But, you know, I just don't know if you can raise your rents up to 1100, definitely not to 13, 1500. That's for sure not happening.
Right.
So I don't know if you can raise them to all the way to 11. Let's see if we can. They don't really show us the previous rents here. Let's see how long the tenants have been there. So they started in 2016. These are 2 beds. So we were looking at some 1 beds. Maybe you can raise the 2 beds up quite a bit, but they're at like 850. The 1 beds are at 7s, 6s, 675, 750 for the 2 beds. I don't know. Let's say that you're probably gonna have to be careful with this one. Raising them up too high, you're probably gonna lose a lot of the tenant base if you jumped up too high. So what do you think? But you will have rental increases. Everywhere has rental increases. So like, what do you think you're gonna raise the rents to?
Like
After your first year.
like what's reasonable? I would say now probably like 50 to 75 maybe, or 50 to 100.
Okay, 50 to
It's
let's
probably
call
more,
it 50.
yeah,
Let's
more
call it 50. So what's 50 times 56
2800,
times 12?
33,600, 33,600,
All right, times 0.9.
30,240.
All right, remember that number, 30,000.
Yeah, 30,240.
Okay, 30,240.
Divided
I
by the
don't think I don't think this property is a 5.5, 6 cap for Houston. I think you're gonna go find better deals in Houston at that. I'd say this one might be closer to like 7, 7.5 right now. Maybe when the market gets better, interest rates lower, maybe it gets closer down to 6.8 or 6.5 then. But let's run this new valuation at a 7 cap. So take your 30 grand and divide that by 0.07.
432,000.
All right. Equals 430 grand. Okay. Now what's your cash on cash now that you've raised the rents from 30K? So you got 52. Yeah. 52 plus 30. So now you got $82,000 a year in cash flow. Divide that by your $1.5 million down.
I
Yeah.
got,
Huh?
I said I got lost. What am I dividing? The 5.4?
We're looking at your cash flow after you raise your rents and what your cash on cash return is going to be then. And so going in, you're at a 3.4. You raised the rents by $50. You created, $430,000 worth of value, give or take. And now your cash flow is about 5.4% cash on cash. So it's
Okay.
still not tremendous. What do you think? What do you think you should offer on this one? 'Cause what are the deal requirements?
Uh,
Opportunity, value, equity, multiple exits, location, investor demand, cash flow, financing management. So like at the current price, you're probably overpaying for it. So you're probably not walking into much equity. But what price do you want to buy it at? Like what price makes this a good deal?
3.7? 3.7 million?
All right, how'd you come up with that?
If I'm being honest, I was just throwing out a number.
All right, well that puts you about a 7 cap. Let's do it at a 7.5 cap. So just take your 260 NOI, divide by 0.075, and that puts you at about 3.5 million. So if you pay 3.5 million for this thing, now your debt looks much better. Now you're coming in way less. But if you pay 3.5 million for this thing, you're gonna put down probably about the same, 1 million now. Your debt will be 2.5 million times 0.075. Your debt will be about 187.5 minus 260. So your cash flow year one will be about 72,500, give or take. You're going to put about $1 million down, and that's about a 7.2% cash on cash return year one. That's higher than your year two cash on cash return after you raise the rents in the first scenario.
Yeah.
So after you do that, you're looking good. And then you add in the additional 30,000 of NOI by raising the rents. Now you're at 100 grand of cash flow, and you're at a 10% cash on cash return. And I would say that you probably want to be closer to there, around 3.5 million on this one. And then it starts looking like it's a good deal, in my opinion.
Would you say that that's very much possible negotiating? Because that's not too far off 4.2.
It depends on how motivated they are. If Steve Wu doesn't give a shit if he sells it, then no. But if Steve Wu has his property, if his debt's about to expire and he has to sell this thing, in the next couple of years or in the next 6 months or whatever it is, then maybe. But that's why the motivation, the story is so important, because right now you and I are just making stuff up. We have no clue if it's possible until we call Steve Wu and figure it out.
It's 115.
Let's call Steve Wu and figure it out. It's
All
been
right.
about enough time. Hi, is this Steve?
You wanted to know what is this in reference to?
Yeah, I'm calling about the apartments. I'm an investor out of Austin. I wanted to talk about doing business together. I want to buy these.
Okay, just a minute.
Now let's see if he's actually interested in selling. If he won't even take the call, then we just wasted 30 minutes underwriting a deal that's not even for sale. That's what I'm saying. You don't want to dive too deep into this stuff until. Hey Steve, my name's Alex. I'm out of Austin, and we're looking to buy some more multifamily in Houston. I was combing through CoStar and came across your apartments here on Brayburn Glen, and just wanted to see if you might be interested in selling.
Let's do this way. Just like send it to me what is your email address? Okay, I'll send some information to you.
Okay, well, real quick, Steve, just while I got you, I mean, are you interested in selling or not really?
If we can make the deal, yes.
Yeah. Okay. Off the top of your head, where would you need to be at?
That one I'm thinking about at least is 4M.
4 million?
Mhm.
Okay. All right. Are you considering selling others?
No,
No, just this one?
yes.
Okay. And why would you want to sell this one? You just don't, is it doing good for you?
It is good, but just over the, just reached our financial terms.
It just reached your financial terms? Got it. Like your loan's coming due?
Yes.
Okay. When do you need to sell it by?
That's why I say I'm not really have any schedule with it. We can make the deal. We can make the deal.
Yeah. Okay. And then just to clarify, you want me to work directly with you or you have a broker involved?
You can directly work with me.
Okay, perfect. All right, yeah. Thank you, Steve. Send that stuff over and I'll check it out.
Okay, cool.
All right, bye. All right. Well,
That's
he
great.
just went from 4.2 to 4.
Yeah, that's really good. I knew it was a broker, but I didn't realize how much they actually get a percentage out of big deals like that. 200, 300,000.
Well, it's because there isn't a broker. You've got, it's probably like 2, 3 people down the line when Steve isn't working with a broker. That's what he just said. He doesn't even have a broker on the deal.
That's good. We could in the email it said no seller financing, but I'm sure like he sounds like we can negotiate something like that with him. And
Well, not if he has debt on it that's coming due, right? So if he's got debt on it that's coming due, that's what he says is why he's selling. Who knows if that's the case or not, but could be. I mean, he bought it in 2017. Maybe it's a 7-year term, right? And we're approaching 7 years since October 17. So he might have a maturity date coming up and he cannot seller finance it. He might be able to seller finance a portion, right? Like if you pay 3.5 million for it, the down payment he might be able to seller finance or a portion of it, but not the whole thing. Makes sense?
yeah.
We can't get, I don't have any loan data on it, but I would say I'll get you Steve's info, and I'd say you work directly with Steve on this deal.
So what would be, I guess, my next steps as in working with him to move forward with this deal? Like initially, what's your first like thoughts on it? Like as of right now, like you think it's a maybe deal or
What price do we want to get in at?
3.5?
That's next steps. Talk to Steve, tell him best you can do is 3.5 million, and here's why. We just run him all the way through these numbers. He's at 4. You're not too far apart. Since these other, jabronis out there who are trying to add 200 grand on top, then a 3% fee on top of the 200 grand, now those people are not involved, and you're talking directly to the decision maker, then you might be able to work it there. Maybe you pay his 4 and he finances 500 grand of it, right? But the next steps are, where the deal's at. We just ran through all the numbers. We know it's not a good deal at the price that we were looking at previously. We know that it starts to look like a good deal at 3.5 million. And so I would go 3.5 million or below and dive in deeper to the motivation and the story. Steve didn't want to talk to me really, but you need to dive in deeper into the motivation and the story about when's his debt coming due, how much does he owe, when's his maturity date. That way you can start using this to your advantage in the negotiations. Back to the chess match that we were talking about at the beginning of
Right.
the day-to-day. So that's it. Good job. I like it. I think it starts to look like a really good deal at 3.5 million. If you can get that debt.
Yeah, I'm gonna see if I can get it a bit lower than that. Probably, I don't know, 3.2, 3.1.
And then you only need to raise about $1 million, which is much better than raising 1.5. And huh?
I said, which is not hard.
No, you got it.
Yeah.
So you did good, Benny. This is a good deal. And at 3.5. All right.
Yeah.
And here's the other thing, Benny, is there's a lot of other deals out there like this. So you just need to find them, right? Like if you look in Houston and Crexie, I guarantee we could find like 8 other deals just like this one on Crexie right now. Just because it's listed at a price doesn't mean that's the price, right? It's your job to get it down where it needs to be. The problem will lie on, I talked about getting excited about one deal earlier, and we can't have that happen. Like the moment that we get, caught up into one deal, and it's likely not going to work, just FYI, you're going to go to him at 3.5 and he's going to say no. And then he's going to start working you up to 4 million, right? So it's your job to stick here and bring him down here. Now, it's much harder to do that when this is the only deal you're looking at. But when you've got 100 deals you're looking at, you're like, I don't care if Steve comes down or not. I got these 10 over here, right? If Steve comes down, great. I'll buy it when it's a good deal, but I'm not going to buy it when it's a bad deal. And it doesn't matter because I've got these other 100 deals that I'm looking at. So y'all need to be working multiple deals at once because the one that you're focused on likely isn't going to work. And you need the other ones in your pipeline. If you don't have them in your pipeline, you're going to be emotionally attached to this one deal, and you're likely to make emotional decisions that are not smart just because you want to get something done and it's the only deal you're looking at. Make sense?
Makes sense. Sounds good.
All right, good job, Benny.